we're talking about technology, and so this can only work if people have access to the internet, have access to smartphones, are in a place where there's Wi-Fi. And if you can't bring the technology to people, then this does no good. And so that's why I say when you roll it out at the retail level, part of it is an old-fashioned hardware play as well, where you've got to make sure people have access to laptops or to smartphones and to Wi-Fi. And while, again, we're getting there, it's going to take a long time. But by the way, the best example as to how you do that is if you look at some of the countries in Africa that didn't have the traditional landline telecommunication systems that we're used to, they were able to leapfrog that issue by immediately going into cell phone technology. So they were able to rolling out a cell phone network as compared to creating wiring an entire country with landlines is cheaper and faster. And so they were able to do that. And once you start to do things like that, you can bring the technology down to the level of individuals in those locations that make it possible then to give them access to a digital currency. But again, it's going to take a while. It's not going to happen overnight, but it's promising. But I also want to talk about, one of the downsides or negatives, because money, if we look at traditional money, paper money, it's dumb. What I mean is that it doesn't do anything other than you can spend it. So because it is inert and it's just a physical piece, physical paper, if we don't want to track it, we don't have to. And so that creates problems. When we're talking about central bank digital currency or similar types of things, we're talking about ultimately computer code that exists on a blockchain, which sometimes we call smart contracts. And the most important element of that is that because it's computer code, we can build things into it. In other words, we can build into the virtual currency or the digital currency not only the ability to kind of look at where the transactions are going and what's being spent where and how, but we can tie an identity into it so that you can verify it's your money and not somebody else's. So you could walk in, you could walk into a grocery store and using central bank digital currency that's tied into your smartphone and tied into an identity, just walk up to the clerk and hold up the phone to pay, and it would automatically, among other things, verify to the clerk, for example, that you're over 21 and you're entitled to buy beer. And so we can embed now, once we convert money from being dumb money to smart money, we can convert into it the ability to do other things like track and manage identity, which makes it easier to transact, makes it easier to protect yourself from losing your money. But it also means that if it's used the wrong way, it makes it easier for governments to kind of monitor what you're doing. How are you spending your money? Where are you spending your money? Who are you giving your money to? Are you buying things that you should be buying, or are you buying things that maybe you shouldn't be buying? And so there is concern when countries like China, which are moving forward aggressively to create a central bank digital currency, are potentially looking at how they can embed within that central bank digital currency the ability to monitor transactions, monitor activities of their citizens. Because if you monitor how people spend their money, that's one of the most significant ways you can monitor what people in your country are doing day in and day out. And so the downside is that governments could use a central bank digital currency as a way to monitor their citizens in a way that most of us, at least I know, I wouldn't like. So that's the potential negative. If there is no controls imposed upon a government, if a government forces you to transact in digital currency, they get rid of all of their paper and coins, and then they start to monitor what you're doing, that's a bad thing.